Street's initial reaction, which was quite negative, down 500 points at one point. The hell with Wall Street was his reaction. Here now, representatives of Wall Street. Catherine Rooney-Vera, Dan Schaefer, and Alan Nuckman, a floor trader at the CME. Dan, the official view was take the end of the day, not the beginning of the day. The markets are convinced this is not going to be a big deal and not to worry. Do you agree with that?
Oh, absolutely not. This is a big deal, and the markets are going to trade with more volatility continuing after this. We need these tariffs. We have been supporting the Chinese economy for years. Just look at their GDP, 6 to 8% expectations, and ours below 3. That doesn't make sense. And Neil, they use sweat labor to get out those low-cost goods. So,
you
I think President Trump is absolutely right.
This, and it's a good development. Alan, all I know is that this started targeting steel, aluminum, that sort of thing. It's grown out and grew better than 1,000 different items, almost every agricultural item you could shake a stick at, and more to come, we're told. Does that worry you just as a trader?
Well, tit for tat. Tough tariff talk is nothing but talk right now. It's just a proposal, so we'll have to wait to see. But the market doesn't believe that it's going to be as big a deal as it looked like early this morning. So we'll have to wait to see. But you talked about some technical levels. We bounced off some lows. We actually had higher lows today than we had on Monday. So this is a healthy technical turnaround and a big turnaround. Obviously, we have to build on it. To get to your last guest, we have different economies. We're a service economy. They're not. They're an industrial economy. We're not going to go back to the 1950s or 1930s and start making goods like we did on that scale. We're a different type of economy, so you can't compare them head to head. Let's look at the market reaction. The market reaction net is remaining muted. Every time Mr. Trump says something, you get initial reaction, but the aftershock has been relatively positive once people think it through.
All right, maybe so, Catherine. I just know that these things tend to widen and expand. Very few people anticipated the Trump follow-up tariff measures of better than 100 items last night. The Chinese quickly responded overnight, and that's what prompted this overnight selling across much of Asia and all that. I'm wondering what other surprises were in store, though. I welcome a run-up in the market. I'm sure you do, but that this is something that just seems to grow exponentially here.
Well, Neil, I think it's a strong negotiating tactic, and from the beginning that seemed to be the case. We have precedent here. NAFTA, the president sounded very aggressive, and it now seems we're on the brink of a successful NAFTA renegotiation with a softening of our stance. The same may be true for these tariffs. If the U.S. achieves improvements on theft of intellectual property, an opening of financial services in China, and an opening or a relaxing of imports, of U.S. imports to China on cars, then that is a success as well. So my contention, Neil, is that we will not be entering a trade war. I don't think that's a very big probability here. And in fact, the U.S. can improve trade dynamics with China. And I think precisely that's what the Chinese authorities and the U.S. are at the negotiating table in D.C. right now working out.
Well, we hope, right? I'll raise that with Larry Kudlow a little bit later. But the one thing that people fear here, and I know they always say, Dan, to your point earlier, and your hope that cooler heads prevail, but ultimately that doesn't happen. You think that we have to get tough with the Chinese, even though this isn't exactly the free market way to do it. Now, I understand that point of view, but there are a lot of people who say, well, China doesn't play fair anyway, so this will have the desired result. We win. What do you think of that?
Well, China is not the free market, and Donald Trump campaigned on China being an issue. We have a huge trade deficit with them at the same time. So, we're giving them our money and they're buying our debt. That kind of doesn't make sense. So I think that the markets are going to be very concerned about it. And again, I don't really call it a trade war. The tariffs have been in China for many years, and their goods have been coming here with no tax or no tariff on it.
Oh, well, no, you're quite right. I mean, the Chinese have not been a fair trade. I understand that, and many have argued, Alan, back at this, well, is this the way to deal with that? I'm not even here to debate that. I am noticing, since I've monitored this day by day, the number of items affected. As I said, when you think about this starting out with aluminum and steel-related products to a list now that's grown to more than 2,000 items. For example, I had no idea, maybe you did, Alan, because you're so smart, that in beef alone, there's fresh and cold boneless beef, frozen beef with bones, frozen boneless beef, frozen boneless meat, frozen beef chops, frozen bone chops. And those are categories as part of a list of targeted items. So I'm wondering where the heck this is going.
Well, it could get a lot worse. Now, we talked about using soybeans as a barometer. Now, soybeans finally got hit today. A little bit of a delayed reaction. They said that was their big shot across the bow because they're our #1 export customer when it comes to soybeans. So that's a big deal. 50 cents out the open, ended up being down only 20 cents. So not that catastrophic, but it's going to hurt the agricultural markets probably the hardest. And I think that's their point, is to remind the farmers here, which obviously is a subsidized area of our economy, to get back into the China supporting some of their products. You know, the farm products could very much suffer, just like corn. We've talked about that. NAFTA, if that falls apart, Mexico's our #1 customer there. So we've got to be careful if we get in this kind of battle, because it is a tit for tat, and it could hurt the Midwest.
To your point, and Catherine, I think you touched on it. The idea is that this will never come to pass. The betting seems to be, I know Larry Kudlow and others have said it within the White House, it'll never come to pass. You'll never see it. So no need to fear it. But we keep adding on to it here. And I know we've got this window of time, you know, some months here before these things would kick in. But I know something about deadlines in Washington, and I guess you can apply to the globe. We always push up against them, and then kablooey.
Right. Neil, as you mentioned, this is a process, and the Chinese haven't even set a specific date as to when these tariffs would come into play. The U.S. is in a couple months, so we have a good time frame to negotiate, and I contend that we're not going to get it. In the background, Neil, what we have to remember is today we got a labor report. ADP came out very strong. On a 4-month average, it was the best in 4 years. It bodes very well for this Friday's non-farm payroll and unemployment rate, which I bet
No, Catherine,
could very
I fully
well
agree
drop
with you. The
below
underpinnings,
4%.
the fundamentals are very, very sound. I agree with that.
Good.
Earnings start in 2 weeks.
Okay, so will that offset
Yes.
whatever we're getting here? In other words, there's no need to worry here. Alan.
Yeah, I think so. I think we can start focusing on fundamentals and how well corporate America is doing in their profits. That starts again in 2 weeks. Look to see the numbers of the banks roll out. We're talking about $5 billion profit for the quarter per bank. So these guys are doing very well, and that'll get us back on focus and realize what the game is here. It's not a game that we like to play, this chicken, but I guess look at the end result as you know, as worth it to some.
All right, guys, thank you all very, very much. Again, for those of you just tuning in and you're wondering, wait a minute, I was looking at the markets earlier when I was watching Cavuto on Fox Business Network, which if you don't get, you should demand, and the markets were tanking. They were down hundreds of points at our worst level, over 500 points, and the idea that we're going to go into an extended nasty trade war. Then all of a sudden, a reversal of about 730 points. What the heck?